Welcome to the daily stock review of California Bancorp. Goal of this channel is to uncover the world's best stocks that have 100x potential by reviewing 1,000 stocks in 12 months. So if that sounds good to you, subscribe to come along. Who am I? I'm an individual investor on the journey. I'm 2,500 hours in over the last 7 years, and I'm sharing the lessons along the way. This is my investing process. It's got 5 steps. Today I'll go over how I came across this stock and then perform the 5-minute check to see if the business is worth looking into further. These are the guys I learn off. They did pretty well for themselves over just a little while. But by following the breadcrumbs they've left behind, we should be able to follow in their footsteps. If you'd like the resources that I wish I had when I first started out, including calculators and checklists, you can check that out with the link in the description for free. So let's get started. California Bancorp. I came across this stock when I was doing a screen for small caps, so businesses less than 2 billion and that had revenue growth over the last 3 years of greater than 30%. So just looking for anything that had some rapid growth. Now, to perform this 5-minute check, I'm going to need the annual report. So literally just type in California Bancorp annual report, crack open the latest one. Doesn't matter that it's not 2026. Now, it's an American company, so the annual report is in the 10K format, and it should have a little page here. Oh, legends, and they've got links. So we want to have a look at the financial statements. It's a bit cold where I'm in, so I'm putting the hoodie back on. So we want to have a sticky beat through these. And in our quick check, we want to have a look at a couple of things. So I want to understand has the business mastered its customer? Oh, annoyingly, it doesn't go back to 2023. So let's grab out (2023's) annual report as well, because we just want to. These kind of checks are really about the trend and then trying to see how they're going. And looking at pretty figures is a way to fall off from where we need to be focused on. Right, so on our income statement, a bit zoomed in too far. We've gone from in 2022 from 86 million in interest and fees and loans, interest and debt securities to a lesser extent, all this stuff. We end up with our total interest and dividend income of $93 million. Up to then 123 million, 179 and 225. So we've gone from 93 million. It's doubled in a 3-year period, and then it's continued that trend upwards as well. So that's good to see. A double in 3, can't complain. Now let's have a look at what the margins of the business are doing currently. So we've got interest expense, interest on now, blah, blah, blah. Total interest expense. We've got that. Our net interest income, 122 and 169. After credit losses, oh, we've got, with these banks, they've got a whole lot more breakdown of all the bits and pieces. But for this 5-minute check, really got to focus on what I need to be looking for. So like non-interest expenses here is like all the usual stuff in terms of the operational part of the business. So like you got to pay all your employees and things like that, rent of for like the lease that you're in the building and stuff like that. So all these costs come out. Total non-interest expense is 97 to 100. Now I end up with our net income. Interesting. So let's have a look back and see what that figure, net income, was in these previous years as well. So we've gone from 16 million to 25 million, down to 5 million, and then up to 63. So it looks like we've had some significant bumps in this previous year that's taken a big whack out of the net income. And then only recently has it gone back to kind of a normalized rate. We've also got these figures in here, so income before tax and then income tax expense. So in this previous year, if we're wondering why, the stock didn't really jump up a crazy amount or anything back here, it's because that net income, a lot of investors put a lot of weight on it. And if people hadn't looked to see what kind of one-off expenses were in there, they would have seen, things were looking a little bit better than what they were actually shown. Now let's go and have a look at the cash flow or the assets. For a bank, it's kind of quite difficult to see the risk in the loans that they've given out, which you can't. At the end of the day, it's really a matter of looking at their default rates and things like that, but that usually doesn't happen until it gets upon hard times, and we want to make sure the business isn't exposed to a lot of risk. So we've got to look at the historical default rates and things like that, and make sure this business is making low risk loans. All right. So total assets against total liabilities, we've got a bigger number, $4 billion against 3.5. We've got total deposits, other bits and pieces like that. Loans held for investment. Awesome. So let's just have a look at the cash flow statement. And I just want to see what the net cash comes out at the end of the day from operating activities. So we've got 57, 50 million. Let's do the same in the previous report. Net cash was 13 up to 33. Oh, nice. So this is definitely a really good trend. So we could go back a little bit more to try and get a bit more of a better look at it, because this net cash provided by operating activities can be pretty lumpy and vary a lot from year to year. Just with the fact that it's a stamp in time of where certain receivables and payments were within different parts of the company. So is there any big one-offs? See net increase or decrease in other items. We've got provision for credit losses and things like that as we go around. All right. So where is the business invested that money or spent it? We've got proceeds from maturities. We've got purchases of debt securities available for sale. And then repayment of loans. Proceeds from sales. So it kind of looks like here that they've just pretty much juggled bits and pieces of the business in terms of what they were holding on to at the time. They haven't really done too much with it. However, in this previous year, we had net cash acquired in business combination. Ooh. So they may have had, I'd have to have a look back, but they potentially had a bit of a merger, and out of that, they got some extra cash that they've put on the table from that. And some other bits and pieces that have come out from that as well. Now, that's interesting. Is there anywhere else where they've spent that money? Net increase in deposits, repayment of other borrowings. So they've paid some debt off. Net cash. All right, so they've started the year about the same as the way they've ended it. It's pretty good. So this business's cash position is growing in terms of its net cash flow or free cash flow. Now, banks are a little bit different. They want to obviously increase their the number of loans that they're providing, but they want them to be as low risk as possible. You can make really risky loans and then hope that nothing goes bad. And then when the tide goes out, you're up shit creek without a paddle. So with this business, I am liking the amount of growth in that free cash flow and the speed at which it's acquiring new customers and new revenue. So this would definitely be an interesting investment to do a deep dive on. There doesn't appear to be anything that's jumping out at me at this stage that says absolutely not. And so with the prospects of the business and that growth, I think it would be a good one to look into. Now, how's it looking at the market at the moment? It's got a price to earnings ratio of 11. It does look like it's going on a steady incline at the moment. And it may be that investors are starting to turn around their existing sentiment on the stock. Now, what I'd really be looking for in that deep dive is why. So why now has this business really started to pop in terms of its revenues, and where is that growth coming from? Because there's a lot of banks around. There's what makes these guys so special? It's not like there's been no banks and they're jumping into existing markets. They're taking market share from their competitors. So we really need to understand why and how. Now, if you like this breakdown, let me know in the comments. Feel free to put any other stocks you guys are looking at. Any other questions you guys have got, I'm here to help. I'll be providing that in upcoming videos for Q&As. And if you like that, check out this next video because YouTube thinks you'll like it. Cheers.